Varun Goel, Senior Fund Manager Equity at Mirae Asset Investment Managers, who's joining us on the show. And Varun, hi, good afternoon. Thanks for your time today. Now, of course, all eyes are going to be glued to that GST meeting tomorrow and day after. Give us a sense of what kind of announcements are you expecting? Largely, the market has, factored in what we can expect in terms of the rationalization. But on the basis of that, have you made any changes, or do you plan on making any changes to the portfolio?
Yeah, good afternoon. Thank you so much for having me on the show. I think broadly, it looks like for the year FY26, it should be a year of revival, cyclical revival in India's GDP growth. I think together with the significant monetary easing that we have seen, this consumption stimulus, first through 1 lakh crores of direct tax cuts, and hopefully the approach to reviving economic growth, both on the consumption side and hopefully as the interest rates cuts get passed on to the system, even the capex and the real estate side can start doing well. So our sense is for the year as a whole, we should see earnings growth revival from around 3-4% last year to around 10-12% this year. And incrementally, sectors like auto, consumer durables, consumer staples, there is expectation that we should see a good festive season, and hopefully these companies can build on that growth momentum going forward.
Right, so select sectors to watch out for, be it autos and consumer discretionary. But Varun, the one of the sectors that nobody is really touching right now is actually the pharma space. Yes, that overhang with respect to tariff does remain, but if we look at the longer term picture, if we can pull up the charts of the last 3 months for select companies like Sun Pharma, Lupin, Dr. Reddy, Cipla, they are quite hammered in the past 3 months. I don't think that any of these large cap pharma majors have delivered anything on the return side. The earnings were not that bad. But what is lacking as a trigger with respect to pharma space, Varun? What are your thoughts, and when do you think that investors can once again find interest here?
No, we are constructive in the pharma space as a whole. I think while there is overhang of tariffs or fear that tariffs may get into place sometime during the course of this year, our sense is it will not be a very material roadblock for this sector. I think CDMO space is clearly a winner from a next 3 to 5 year perspective. We see several emerging opportunities coming up in that space. I think domestic formulations continue to be a very robust and secular story. I think hospitals and health insurance companies also continue to do well. So I think overall as a basket, the pharma and the healthcare space continues to be attractive, and our sense is from a slightly medium to long term perspective, the sector should continue to do well.
Okay, so that's the take on the pharma space. Shivangi, coming to you, any stocks that you would find value in the pharma space right now? They're looking good on the charts because, like Shrishti was highlighting, they've been in a lull for quite some time. So any fresh buy on dip strategy if you're seeing that kind of value anywhere?
Now, of course, talking about the pharma space, these have been quite volatile in the last 4 weeks. And looking at the overall space, whatever little momentum was trying to build up hasn't been able to sustain at these levels. So I would actually wait and watch on this one. Contrary to this, auto space and auto ancillary space is quite positive, so one could focus there.
Okay, so that's the take coming in on some of the pharma stocks. Let's talk about some other sectors that are in focus today. Case in point being FMCG is doing very well. Top sectoral gainer today, names like Dabur are up 4%. United Brewery is doing well. Emami, Colgate that Shivangi was flagging off, Godrej Consumer, Nestle, all of them actually have already started showing some signs of that GST rationalization cheer. Of course, we'll be waiting for that clarity over the next 2 days. But any stocks from the FMCG space that are looking good, staples or otherwise?
Yeah, so definitely the entire sector is looking very strong on the charts, and in fact, it has been outperforming. The entire consumption theme has been working very fine, and there has been some positive news and developments also which can support this sector. So now I can see some strength building in the FMCG space as a positional charts looking quite strong. If I were to look at the ratio chart, if I compare FMCG with the Nifty, I see a good strength coming back to the FMCG sector, because in year 2025, FMCG has not performed that much. So we can expect some retracement of that, and FMCG as a theme can do very well. So not only the large cap stock like HUL, Godrej Consumer, Dabur, these are already looking good, but Pidilite is also looking strong. Some paint stocks are also performing well. So I see a broad-based rally in the FMCG space. Most of the stocks in this particular space are looking good and good to go long from here, and I see a good upside. So I'm taking a positional view. Anything can happen in next couple of sessions because of the GST announcements and all. But the overall chart patterns and ratio chart suggesting that there is a good upside available in the FMCG space. This consumption theme will play out, and auto is one of the part of consumption theme. Another theme is the FMCG, which can do well. So auto has already performed in anticipation of good announcements, and FMCG is yet to perform. And charts are suggesting very good upside, very healthy upside from current level. So definitely paint stocks, then the adhesive stocks, as well as the HUL and Godrej consumers of the world are looking very strong on the charts.
All right, that's the take on the FMCG pack. But the big news that we have been tracking with respect to the auto space is that the GOM eyes higher GST of 18% for 20 to 40 lakhs priced EVs. And let's get in more details on this one. And for this, my colleague Prakash Priyadarshi is here with us. Prakash, over to you.
Yes, GST, GOM on rate rationalization has made a proposal to hike GST on high-end cars, primarily priced between 20 lakh to 40 lakh, from 5% to 18%. And this recommendation is part of the proposals made by the GOM, which comprises state governments, right? But the significant part is that this is not part of the centre's proposal, which has been made to the GOM. Sources are indicating that the central government has not recommended a hike in GST on EV cars. In fact, hike in GST on EV cars is not part of the central government's proposal, which primarily endorses for two-rated structure, essentially 5% and 18%. Along with that, sources are also indicating that the proposal is not part of the agenda for the next GST Council meeting, which is scheduled on September 3 and 4. And this is unlikely to be approved by the GST Council. Of course, the GST Council has to take the final call in any such proposal, but the sources are indicating that any such recommendations have not been made by the central government to the GST GOM, and therefore it is unlikely that the GST Council is going to take any such call in the next GST Council meeting. Back to you.
Prakash, thanks for taking us through all of those details and providing some clarity on what we're hearing from agencies. And like you mentioned, all eyes are going to be on the final verdict coming in from the group of ministers either tomorrow or day after. So on the back of this news flow, as of now, you have some auto stocks with EV exposure in their portfolio that are tanking in trade. You have M&M that's lower by 2.5%. Tata Motors also feeling the heat slightly. 0.8% cut is what we're seeing on Tata Motors. But while that is on autos, and autos are feeling the heat right now, auto anchs are doing pretty well. And one particular auto anch segment, that's tires. Tire stocks are buzzing away in trade after auto majors reported better than estimated sales in the month gone by, and also some more factors at play. My colleague Kanishka Sarkar is here with more details on what has led to this rally in names like CEAT, JK Tires, Apollo Tires. Kanishka, over to you.
Well, tire stocks are on fire in today's trading session. Well, let's take a look at 6 key reasons why they are trading in fast lane. First up, August auto sales have come in better than expected, and that's the reason why these stocks are in focus. Data from the rubber board suggests that CEAT, Apollo Tires and JK Tire, their sales rose up to 4% year on year in the month gone by. Meanwhile, MRF saw a 2% uptick, whereas Balkrishna Industries, they saw a 1% uptick, and that's the reason why these stocks are in focus. Second reason, of course, that raw material prices are stable, with natural rubber price that is also seeing a downward trend, and that's the reason. The third one, of course, is that there is a festive push also, due to which replacement demand that is expected to pick up. Other than that, export demand could also see a revival once tariff clarity emerges in terms of US tariffs that have been imposed in India. On the corporate side, CEAT has completed a key global acquisition on the OHT segment. That's the reason why CEAT is rallying in trade today. And lastly, we're also seeing some DII buying in some counters, and hence all of these tire stocks are in the fast lane today.
All right, thank you so much, Kanishka, for highlighting all the factors that are at play for the tire counters. But Vinay, seems like no stopping for all these tire counters. Anything that is looking attractive to you on charts?
So CEAT is looking quite strong today. It has recently surpassed the 200 days average and 50 days exponential average. So looking stronger and good liquidity is also there. So currently stock is trading around 33.77. So today's low become the strong support, which is around 32.20. So positionally that can be kept as a stop loss, and we can expect some more upside in this counter. So CEAT looks quite strong on the charts.
That's the take on some of the tire stocks in today's trading session. But Varun, what's your take on two counters or two themes rather that have been seeing some uptick right now, and that's the entire defense and railway counters. Both of them are seeing some good moves in trade today. How are you positioned when it comes to these sectors?
I think as far as defense is concerned, it's a secular theme. We believe a lot of exports will happen out of India. And of course, from a domestic requirement perspective, we have seen significant requirement from upgradation of India's defense capabilities. So from our next 5 to 10 years, we see a very strong revenue pipeline for most OEMs. And of course, there is a big ecosystem of vendors which is getting developed on both public and private side. So as a theme, the sector is pretty attractive. Of course, valuations are a challenge. We believe that the large cap space is better placed from a valuation point of view as compared to the small and mid cap space, where the valuation seems to be pretty steep.
All right, that's the take on select counters, but just a few minutes left before we shut shop. And yes, we are sub that 24,600 mark for Nifty 50, while Nifty Bank has tanked over 300 points right now. But Varun, how do you play financial as a theme right now? Because for now, of late, the focus is clearly on some of the sectors that will be the biggest beneficiary if that GST rate rationalization takes place. But financials, that remains to be the core theme and the major driver of what really in terms of the finances and loans will happen. But the other fact of the matter is, in a rate cut cycle, the NIMs are expected to go down. So how should one place their bets within the financial space right now? Should it be smaller players within the MSMEs? What are your thoughts?
Well, our sense is once the rate cuts that have already been carried out, once they get fully passed on in the next few months, the credit growth for the system as a whole should increase from around 10% to 12%. I think in a scenario where the system as a whole is seeing 12% growth, Tier 1 banks, both public and private, should be able to see 14-15% kind of a growth. And we remain constructive on that side. I think as far as the banking system is concerned, the pressure on NIMs will stay for one more quarter. And from the third quarter onwards, our sense is NIMs will start getting better. And by the fourth quarter, by the exit of this financial year, we believe NIMs will go back to the levels they were on the exit of FY25. So broadly, I think we should see a reversal and strength coming back to NIMs by the end of the year. As of now, of course, we believe NBFCs should benefit because they're able to pass on interest rate hikes a lot faster. So in this environment, we expect auto NBFCs, consumer durable NBFCs to do well. And hopefully, from the third quarter onwards, we should see even the banks delivering very strong numbers. We remain quite constructive on the banking space as a whole, both on NBFC as well as on the banking side.
Okay, so positive outlook coming in on the entire banking and financial space from Varun. But when I coming to you, the way the Nifty has fallen right now, any buying opportunities if you're seeing on the markets right now, where would you be placing your BTST bets?
As you have been mentioning that some of the railway stocks and defense stocks have performed well. So one of the stock which is having exposure in both this segment is the BEML, Bharat Earth Mover, which is looking quite strong. So around 40701 can go long. I would suggest a positional stop loss for 1 week 3840. On the upside, I'm expecting a target around 4280 to 4300. So this should be the target. And the another space in which I can see some strength coming back is the small PSU bank stocks. One of the stock is IOB, Indian Overseas Bank. This is a nice formation on the chart and a nice reversal I can see on the chart. So IOB around 39.81 can go long. 38 should be the stop loss for 1 week, and on the upside I'm expecting a target of 42.80. So these are not the pure BTST ideas, but for at least 1 week we can take a view on this.
All right, so those are the buy calls that are coming in from Vinay. Let's watch out for that. But Varun, what are your sector preferences right now, barring the discretionary side? Because yes, the excitement is there, but anything apart from that, where do you believe that the excitement can be on? Because of late, select IT counters, select power counters, they are showing good moves.
Well, we believe FY26 is a year of India's cyclical recovery, and as such, we are more focused on domestic economy-facing sectors. We expect banking, as a whole, both banks and NBFCs, auto, consumer discretionary, FMCG, real estate, and select capex stories to do well. So broadly, our focus on the preferred sectors are more inward-facing sectors, and we believe that the growth should be pretty strong. We've seen Q1 growth numbers were quite good. And once the full benefit of rate cuts and the tax cuts are passed on, I think this growth momentum should continue to remain quite constructive on the domestic facing sectors.
Okay, so that's the take coming in. But Varun, what's your take on the entire insurance space? Today, some of the life insurance stocks are doing well, but even overall, the street is expecting that the GST Council, they might or waive off the GST on insurance premiums. If that does happen, Varun, do you believe this insurance sector could look even more attractive, or to you right now, is it looking attractive at all?
Yeah, so from a taxation point of view, we'll come to know in a couple of days. But I think even other than that, we believe the insurance penetration in the country is only increasing. We're more excited about the general insurance, especially the health insurance space. That's where we see significant increase in penetration, and that story should continue. And as the auto sector kind of revives, even the auto insurance space should do quite well. So our preference would be more to the general insurance space than the life insurance space. But overall, we expect the insurance sector to continue to do well.
Overall, expect the insurance space to do well. But before we shut shop, the markets for today, they are off the day's highest points. And the picture that we are getting to see from the international markets for now, that is also not turning out to be that great, because the European markets are down, and so is the Dow Jones futures as well. The last time I checked was down over 200 points. And yes, today, we might hear from President Donald Trump as well, as he's gearing up to make some interesting announcements. Only he knows what he's going to say. But what are the markets telling you? Because it's we are sub that 24,600 mark for tomorrow. Where do you see the markets opening, and what sort of a bias can we have on the markets?
Yeah, so bias is on the positive side. The reason behind is that 92% of the index future position carried by FIs are on the short side. So definitely this is an extreme number, which is the highest short position since March 2023. So in this case, even if we get the negative news, the downside will be limited. Or any positive news comes out, then sharp short covering by the FIs in the index future will come, which will push the index on the upside. So I am a bit positive. As of now, we should not compare Indian equity markets with the global markets, because correlation has not been that positive. And in 2025, we already underperformed a lot compared to the emerging markets and developed markets. So we may altogether react differently. And I see some strength coming back to the markets, and some sentiment is getting changed. So I am a bit positive on the markets. I'm expecting that soon, once we see Nifty crossing about 24,800, then we will see a sharp short covering, which can take it up to 25,500 also. So that is a conditional call, but waiting for that to happen. 24,800 is a very strong resistance, and I'm waiting for that to surpass on the upside.
Okay, so that's the take coming in on where the market could be headed. But Varun, coming to you for a final question before we start winding down for the day, how are you positioned, if at all you are, when it comes to some of the white goods? Case in point being Voltas, Blue Star, PG Electroplus, because on one hand we've had that monsoon spoiler coming in for their Q1. On the other side, the GST rate rationalization, if all goes as expected, is expected to give a very big boost to some of these white good companies. How would you approach this sector at the time being?
If you look at the medium-term prospects, definitely very promising. Of course, per capita incomes as they're increasing will make a lot of these products more affordable. And if you look at all the stimulus measures, income tax cuts, hopefully GST tax cuts, and then the year down the line, we will also have the next pay commission. And while the benefit of that might be 1 year away, but broadly from the next 18 to 24 months point of view, we expect a significant revival as far as durable demand is concerned. So broadly, we would be constructive on the space from the next 2 year perspective.
So that's the take coming in on the white good counters for now. But yes, select counters continue to do well. The consumer discretionary, the autos, select metal counters, that's where the excitement is indeed. But Vinay, before we shut shop, just your take on select companies and select counters specifically within the railway pack, because RITES, IRCON, they are actually doing pretty well. Anything in particular you wish to highlight when it comes to RITE and IRCON in particular?
Yeah, so RITES actually gave yesterday there was a breakout and we recommended to our clients. Today we have booked profit in trading position, but the way things are shaping out, I think the entire railway space can extend the pullback. So I'm expecting broad-based rally in the railway pack also. So not only RITES but RVNL, then IRFC, these stocks are also looking strong. So I am expecting 4 to 5% more upside in these stocks. So yes, in the coming days we can expect extension of the pullback in all the counters in the railway space.
That's a take on some of the railway counters. On that note, Vinay, Varun, thank you so much for your time and thanks for speaking to us today.